So, without further ado, welcome to the Legacy Global Gains webinar, where we're going to touch on UK property. Thank you all so much for joining and taking the time out this evening. I can already see some familiar faces. A few people have been speaking to you for a number of weeks. I can see a few existing clients in there as well. And we'll just get this started now and just touch on the agenda for this webinar, what we're going to discuss and look at in more detail. Obviously, number one, why should you invest in the UK? And it's a question we're going to touch on. We're going to look at the reasons why. We're going to look into why Manchester, why Sheffield, why Birmingham, who we are as a company here at Legacy. We're going to look at a map of the UK for those who may not be familiar with the UK. Look at some hotspots and where we've got developments within those hotspots of the UK as well as the process for investing in the UK, how we make it hands-off for international investors. A number of you are tuned in from all over around the world, and how that process works for you. Is it seamless? How do we come in? How do we help to make that seamless and hands-off? And I'll just start by introducing myself. My name is John. I'm the regional sales manager here at Legacy. I've been based in Dubai, in our Dubai office. Been based here for 5 years. I started my career in the financial industry, and I got my qualifications as a wealth and investment manager with the Chartered Institute for Securities and Investments. And while in the financial industry, my passion always leaned more towards property. So as opposed to pensions, regular savings, etc., property always seems to excite me the most. I always found joy in helping clients finding the right properties, and that's where I've sort of narrowed down in terms of my career. And I've been doing this for about 4 years now, specifically in the UK property sector, and ultimately assisting clients in building lucrative portfolios by offering a seamless end-to-end turnkey solution. Now, why should you invest in the UK? A number of you may be looking at various regions across the world. A number of you may have bought properties in various other countries. But obviously, in terms of the UK itself, there are a lot of major reasons, namely the attractive rental yields that investors can enjoy in the UK due to the high demand from professionals and students, which often surpasses those of other major global cities. For example, your New Yorks, your Paris, Dubai, where I'm currently based. So the UK does provide very attractive rental yields, strong capital growth as well. The UK market is a tried and tested market which has been around for a very long time. And the capital growth has always been upward, and which we will touch on in the next few slides. So prices have always increased by an average of 5% per year over the past 100 years, which is obviously driven by a strong economy, limited land supply, and global appeal. The UK's strong economy, diversified economy creates healthy property demand from both businesses and individuals, benefiting investors, and the UK's excellent transport links. So here are just 4 major key reasons why investing in the UK is a very smart and savvy idea. And we will touch on this in more detail during this webinar. Now, if we take a look at the average UK house prices from January 2012 to January 2022, I think this graph gives you a good idea of where the prices have been over the last 10 to 12 years. So the average price in January 2012 was around about £165,000, whereas we looked at January 22, the prices were about £250,000, the average house prices. So this is a very good sign. It's a market that's going up, and there are a number of key events within this time period here. And we'll take a more macro look. If we go all the way back to 1965, you can still see that growth in terms of the average UK prices. Now, if we look at the global recession in the 90s, the global recession in the 2000s, as well as when UK announced its EU exit. This is when Brexit happened, and the pandemic in 2020. It's always moved in an upward trajectory. So it might take slight dips, especially when the global recession happened, which obviously affected everyone. The UK property market took a sharp rise soon after, which shows signs of good recovery, even when global recessions happen, and obviously Brexit and the pandemic in 2020. So this is a very good graph, which gives you an idea of the market's behavior over a number of global events which have occurred. If we look at the growth, this is also a very important sign. Obviously, the UK is a small island, and as opposed to places like Dubai, where the government and developers are building into the sea and into the ocean, this isn't possible in the UK. So there's limited land supply, and as you can see from this graph, the population has continued to go up, and it shows no signs of slowing down or stopping at all. So these are the average UK population from 1971, just below 47 million, all the way up to 2021, where it's just below 57 million. And as of 2024, I think we're around about the 60 million mark. So that shows you a good, healthy population growth in the UK. And if we look at forecasts, so over the last 5 years, this is the annual house price growth in the major cities in the UK. So we're looking at Manchester, Leeds, Sheffield, Birmingham, and London. And as you can see there, Manchester is the best performing city, or has been the best performing city in terms of house price growth in the UK, where you've got London there at 2.9%. Now, 24.8% was a house price growth in the northwest region over the last 5 years, which obviously Manchester is a big part of, and this is from Zoopla at Savills, so it gives you an idea of where the market has been. Now, if we're looking in the future, over the next 5 years, this is expected to rise to 28.8% in the northwest region over the next 5 years, with a 21.9% increase in rental growth over the next 5 years. And this is also from JLL. So we've just picked a number of cities there: Manchester, Leeds, Sheffield, Birmingham, London. And you can see how each city has been performing, and obviously the cities in the northwest region, how they are going to perform over the next 5 years. Now, with that being said, we start looking at hotspots. Okay, the UK market is a lucrative market. Which cities within that market do we now start to narrow down on and start looking at? So wherever you do that needs to have certain characteristics, and we've got a number of them here. Now, these are all characteristics that you should really consider when you're making an investment in any city, regardless of the UK. So obviously a city that's got rising property prices, a strong tenant base, an undersupply of premium housing, strong employment opportunities and job growth, a good population growth, thriving higher education sector and graduate population, affordability, and good transport links. So these are some of the characteristics, regardless of where you're investing. These are characteristics and boxes that needs to be ticked. Now, in terms of the UK, we've obviously done our due diligence, and we've picked out various cities which we've worked on for a number of years. We've got clients who've invested in these cities over a number of years, and have experienced very good capital growth and very good rental yields as well. And we'll just take a look at why these cities. So we'll look at Manchester first. And I've just got a short video I'll actually just play now, which will give you an idea of the city and some of the major highlights of why Manchester. So we'll look at the infrastructure in Manchester. Seconds. The airport. Manchester has the third biggest international airport in the UK, with over 22 million passengers a year. It's also gone through a 1 billion expansion, which is to be completed this year, with an extra 400 million being pumped into phase two as well. Similar to London, which has a reliable underground system, Manchester has a very reliable as well overground system with over 93 stops and 40 million passengers a year. We look at some of the business growth in Manchester. 85 FTSE 100 businesses now have a presence in Manchester. So this obviously includes your Big Four, Deloitte, EY, PwC, KPMG, with about 23,845 enterprises in the city and a 58% rise from 15,060 in 2014. So that tells you a lot about the business sector and the business growth in Manchester as well. We'll move on to here are some of the firms, the top FTSE companies which are based in Manchester. We'll move on to population growth. Manchester's population growth is double the national average. So this is from the Office for National Statistics. Manchester's population is projected to increase by 70,000 by 2025. This is from Manchester City Council, which obviously means at the current rate of construction, Manchester will have a shortfall of at least 50,000 homes by 2025. And this is from Deloitte's Manchester Crane Survey. So these are very good statistics for investors. And these are things that will, get your attention that the population is increasing, but there's a massive shortfall for homes. So that obviously affects the house prices as well as the demand in a positive manner for all investors. Education. So 99,000 students are attending Greater Manchester's 4 universities. There's a 70% graduate retention rate, which is higher than Leeds, Liverpool, and Birmingham combined. And there are 22 universities within an hour drive and 383,000 students within an hour drive as well. So those are Manchester's 4 big universities: University of Manchester, Manchester Metropolitan, University of Salford, and the University of Bolton as well. In terms of job creation, the Centre for Cities ranks Manchester number 1 for city centre job growth. So we've got a list here of some of the major cities in the UK, and you can see Manchester's firmly first there with 84% jobs growth in the city centre. And you've got London, for example, down there at 20 with 71%, with a 22% population growth, compared to Manchester's 149%. So you can clearly see where all the professionals are moving, and also where there are significantly higher job growths within the city centre compared to many of those other cities. And Leeds in second, for example, might have a higher population growth, but there are not as many jobs in the city centre coming there. So 945,000 square feet of office space has been taken up in 2024 in Manchester. Now, this is a 28% increase from 2023, and it's the highest since 2019. So 46% of this has actually been led by the banking sector, mainly the Bank of New York in Manchester there. So that's where the office space is going up, and you can see the highest since 2019. So this is a 28% increase from what the numbers were last year. And the city is now breaking records again after recovering from the pandemic. The city is now making big strides in terms of job creation in the city centre and also the population growth as well. When we look at rental growth in Manchester, it's experienced a 12.2% increase in average annual rental growth for 2023. reflecting a strong demand for rental properties. And if we look at average rents, you can see there one beds from 1,250 all the way up to 2,400 for 3 beds. And these are just average rentals. So prime rental growth in Manchester was higher at 18% annually. This was driven by the premium segment of the rental market. So when we talk about prime rental growth, we're talking about new builds pretty much within the city centre, which have amenities such as swimming pool, cinema rooms, gymnasiums, co-working spaces, etc. So the rental growth in Manchester was highest in these prime buildings at 18%. When we look at economic growth, Manchester's gross value added has grown by 67% since 2000, totaling 42.2 billion as of 2022. And the economy is expected to produce 56 billion per annum by 2035. So Manchester's GVA per capita has risen by 34% since 2000 and is expected to increase by a further 24% by 2035. So obviously this is the economic growth, which is obviously backed by a lot of major firms, 85 of the FTSE 100 companies being based there, more office space being built up in Manchester and taken up by big firms. So the economy is growing. And as you can see there, it's expected to produce 56 billion per annum by 2035. So we'll take a closer look at Manchester. It's got 2.8 million inhabitants. Circa 550,000 in the city centre alone. It's the main driver of the northern economy. There's about 1.5 million jobs. So when we look at the 5-year forecast of where the cities are going, this is just a comparison. So you can see Manchester here in terms of house price forecasts on the left. The UK average per annum is 3.3%, whereas Manchester's is above that at 3.6%. And also from the rental forecast side of things, the UK average is 3.5%, while Manchester is 4%. So this is the period between 2024 and 2028. So this is where we're going in the future. And as you can see there, Manchester is ahead of the UK average from both a house price forecast and also from a rental forecast as well. We'll take a quick look at Sheffield as well. Now, in terms of population and economic growth, Sheffield is named the second fastest growing city economy in the UK. It has a growth rate of 12.4%, developing 3 times faster than London. Sheffield's economy is worth an approximate 15.5 billion. This is from Sheffield City Council. Estimated population growth by 2034 of 62,000. And an additional economic growth by 2041 of 7.6 billion. In terms of education, Sheffield is a thriving university city that attracts thousands of students from around the world for its high quality education. Many graduates choose to stay, drawn by the city's job opportunities and vibrant economy. So in terms of Sheffield's two big universities, we've got the University of Sheffield, ranked 13th best university in the UK by Times Higher Education, contributes 2.5 billion to the economy and supports 30,200 jobs nationwide, and welcomes 10,000 international students annually. And we've also got the Sheffield Harlem University, which hosts the UK's largest modern business school, 94% graduate employment rate, and 74% of research rated world class or internationally excellent. So these are Sheffield's 2 big universities, and that is the role that they both play in Sheffield's economy as well. Now, if we look at 5-year house price forecasts in Sheffield, which falls under Yorkshire and the Humber, this is where the city is going. So over the 5-year period, total house price growth is forecast to be 14.2% in Yorkshire and the Humber. So this places Yorkshire and the Humber in the middle tier compared to other UK regions, indicating healthy growth, which is slightly below regions like Greater London and Manchester, which have higher forecasted averages. However, the region's steady performance suggests ongoing demand supported by its affordability compared to other parts of the UK. So as you can see there, the total change is expected to be 14.2% between 2024 and 2028 at an average of 2.7 per annum. So obviously slightly lower than the city we previously just looked at, Manchester. However, due to its affordability, the city shows steady performance and an ongoing demand due to that affordability. And some of the companies based in Sheffield as well. We'll look at Birmingham very quickly as well. 6.2 billion inward investment into Birmingham over the last 10 years. Birmingham has the second biggest international airport in the UK with over 10 million passengers a year, 150 destinations, and similar to Manchester, it's got a very reliable overground metro link as well, with over 4.7 million passenger journeys a year. And the HS2 railway, which is expected to open in 2029, creating 22,000 jobs, and obviously shortens the London-Birmingham travel to 49 minutes. So this is a major factor for the Birmingham economy, where the journey from London to Birmingham is 49 minutes, and you'll find that a lot of professionals will actually prefer to live in Birmingham despite London's international attraction, because the cost of living is slightly cheaper, and yet they can still get into London from Birmingham in 49 minutes. And as some of you may know, it can take up to an hour to commute from one part of London to another. So this will significantly help Birmingham in making it a more attractive place for investors and also for people living and working in the UK. In terms of population growth, as of 2024, Birmingham population is estimated to be 2.68 million, reflecting steady growth over the past decade. The population is projected to increase by 3.9% by 2028, and it's estimated that over 10 to 12,000 workers have been directed to or have moved to Birmingham due to its significant demand for skilled labour, particularly in sectors like healthcare, construction, and education. So as you can see, 10,000 people are estimated to have moved to Birmingham already, and this is pre-HS2. So you can only imagine the effect that the HS2 will also have on the population growth in Birmingham as well. In terms of education, there's about 80,000 students attending the top universities in Birmingham. It's got a 49% graduate retention rate, and there are 5 universities within Birmingham. And there's just a few of them there: University College Birmingham, Aston University, University of Birmingham as well. In terms of job creation, the Centre for Cities ranks Birmingham number 3 for city centre job growth. So obviously we looked at this graph earlier. Manchester is top, Leeds followed by Birmingham with a population growth of 162% and a jobs growth in the city centre of 30%. Now, there's been 370,000 square feet of office space taken up this year, which is 40% more than the 5-year average in Birmingham. £215 million of investment accumulated in Birmingham's office market since Q4 2020, and a 41% increase on the 10-year average. So similar to Manchester, as you can see here, there's a lot more office space being taken up, higher than the 5-year average, and there's a lot more investment accumulated in the office space since Q4 2020, which is a 41% increase on the 10-year average as well. So the job growth is growing, similar to the slide we've just looked at. It's a 30% job growth in the city centre. The population is rising by 162%, and it's a city which is only going to grow more and more, as mentioned, with the HS2 coming up there as well. In terms of rental growth, Birmingham experienced 16.7% average annual rental growth in 2023, which is the highest among the big 6 cities. Now, this surge in rental growth is driven by shortage of stock and strong demand for tenants as well, with so many people moving into the city. And we look at the average rents here, 1 beds from about £1,075 all the way up to £1,750 for 3 beds. So, excuse me there. In terms of the prime rentals, Birmingham recorded a 12.4% annual prime rental growth. So these are similar to what we said in Manchester: prime rental, new builds with luxury amenities, your cinema rooms, gymnasiums, swimming pools, etc. So this segment recorded a 12.4% annual prime rental growth as well. So very attractive numbers there in Birmingham. and obviously the highest among the big six cities in terms of rental growth as well, surpassing Manchester. In terms of the 5-year forecasts, a graph we've looked at as well. Obviously, the UK average is 3.3% over the next 5 years, while Birmingham is 3.7%, which is ahead of Manchester at 3.6%. Similar with the rental forecast as well. The UK's rental forecast over the next 5 years is 3.5%, whereas Birmingham is at 4.1%. And once again, surpassing Manchester there, which is at 4%. So for all the reasons we've touched on, a very good, a strong student community, more jobs being created, as well as a lot of people moving into the city, more office space being taken up. As you can see, that's why Birmingham is forecasted to perform so well compared to a close rival, Manchester, as well as the UK average in relation to that as well. Now, I'll just quickly touch on who we are as a firm here at Legacy. Obviously, we're all here for the UK property side of things, but we are a firm that also assists clients in getting second passports and citizenships in other countries. And we've also got our Dubai property side as well. We've got clients globally. I'm currently based in our Dubai office. We've got a presence in Turkey, an office in the UK, mainly from an admin side of things. We've also got a presence in Spain, and our client spectrum is very broad. We've got clients all across the world. You're all tuning in from various parts of the world, and we work mainly from the Dubai office to be able to cater to most of our clients, all of our clients across the world. From a time perspective, it helps being based here in Dubai, and our onboarding due diligence is quite stringent in terms of who we work with from a developer's perspective. So we obviously speak to you clients and try and match your investment strategy and your investment needs with the right developments. But a lot of work is done before that in terms of getting the developments on board. So this is just to give you an idea of our due diligence. So from an operations and research engagement, we obviously evaluate the developer, their track record, and make sure that their product or their development and what they're planning to do matches with where we're trying to go as well as a company, and conduct site inspections, pricing analysis, and market research to ensure, right, this development, wherever it's being built, there's a market for that. The prices are fair, it's affordable, and our clients, this is something our clients would be interested in. And obviously the mortgage partner engagement, we want to ensure mortgages are available for our clients. And this is something that we would also look into. What are the sizes of the apartments? Are they over the minimum sizes that are required to get a mortgage? This is all part of the due diligence that we do before getting a development on board. Lettings engagement, review the market, yield forecasts, service charge budgets. Does it make sense for our clients? Is the service charge fair? The rental market in the area, where is this area forecasted to go? We've looked at a number of slides now in Birmingham, Sheffield, Manchester. Those are the boxes that have to be ticked for our clients. And then obviously the marketing engagement to obviously effectively get those developments out to our clients as well. In terms of full turnkey solution, we offer the investment consultation, and a number of you may have experienced this, or over the next few days, when we obviously hope to get in touch with you, we will obviously have an investment consultation to firstly find out what you are looking for as a client, because obviously as a firm we've got a number of developments, and our job isn't to force clients into a certain development because it's nice. The development that we obviously recommend, it needs to match with what you're trying to do in the investment strategy, where you're trying to go over the next 5, 10, 15 years. And it's our duty to make sure that those developments we obviously recommend match with you. And this is all part of the initial investment consultation. And obviously, if we are able to achieve that and provide a solution to what the investor is looking for, we obviously introduce you to the lawyers who assist with the onboarding. So this is them conducting KYC checks, AML checks, and obviously sharing the contracts for that specific development. We then assist with the UK-based mortgage lenders. If you are looking to get lending, putting you in touch with the appropriate mortgage lenders who can assist you to get the appropriate loan-to-value lending that is required for you to complete the investment. And from a full property management service as well, upon completion, we want to make sure that the investment is as hassle-free and hands-off as possible. So we've also got partners who will assist you with the day-to-day management of the property, finding a tenant, furnishing, etc. And UK bank accounts, if this is something that you don't have, we can also assist you in opening a UK bank account. FX services, clients transferring money to the UK, we can also assist you with that. Company formation and setup, clients who are looking from a tax perspective and need their assets in a special purpose vehicle, we can also assist with this. We've got the appropriate partners. And last but not least, obviously the investor and golden visa services, looking at second passports, etc. So as you can see from this, it is predominantly a full turnkey solution. We help you from start to finish. And we've got either ourselves or a partner that we've worked with for a number of years who can assist at each stage of the investment process, from beginning all the way up to end, when you are now making that rental income and your property is being managed. In terms of a mortgage overview, our mortgage services cater specifically to international buyers, offering tailored solutions to meet their diverse needs. With access to UK-based lenders, we ensure fully regulated transactions for our clients' peace of mind. Our offerings include mortgages with loan-to-value ratios averaging 70%, providing substantial financing opportunities. Clients can benefit from competitive interest rates with options for both interest-only and capital plus interest repayment plans. So whether clients prefer shorter term commitments or longer repayment periods spanning up to 30 years, our partners are also able to customize mortgage durations to suit individual requirements. Now we'll just quickly take a look at the developments that we have. This is just a map of the UK. In terms of Leeds, we've got 1 development in Leeds, we've got 2 in Halifax, we've got 5 in Manchester, 1 in Sheffield, 2 in Nottingham, 3 in Birmingham, and 4 in London, which totals to 18 developments. So as you can see from this, that is the importance of the initial investment consultation, because as of right now, we've got 18 developments, and we ideally want to make sure that from those 18, the 1 or 2 that we do obviously share with our clients is the one that matches their investment strategy best. Now, I'll just touch on 1 development in each city. In Manchester, this is the city centre. I'll take a closer look there. And these are some of the landmarks in Manchester for those who may not be aware of the city itself. You've got Media City to the left, Old Trafford in the bottom left corner. You've got the Etihad Stadium, Manchester Stadium in the top right, Piccadilly in the middle, University of Manchester in the bottom. And these are just some landmarks. Here are some of the developments we've previously worked on in Manchester, which are now sold out and completed. And here are the locations of the developments that we currently have now in the blue. Furnace Quay, Berkeley Square, Revere, One Victoria, Kingfisher. So all within Manchester city centre and pretty much zone 1 of Manchester. We've got availability in those 5 developments. In terms of Sheffield as a city, the city centre's there. We'll just zoom a bit closer in. And here are some landmarks in Sheffield. You've got the University of Sheffield there in the left, Sheffield Harlem University there in the middle, and our development that we've currently got in Sheffield, completing in 2026, Belgrave. It's located right there in the city centre. Very prime location, which is very close to both universities, a walking distance to both. And for those who may not be familiar with Sheffield's exact location, here is an example of train times from Manchester to Sheffield, where you can get there in under an hour. And a closer look at Birmingham. This Birmingham is a city. Just take a closer look at the city centre. Once again, here are some landmarks of Birmingham. We've got Aston Villa Football Club, Birmingham City Football Club, the Birmingham Airport, which, as we discussed, is the second biggest international airport in the bottom right, and the Boring Shopping Centre, which is there. And here are two developments we previously worked on, which are now sold out in Birmingham, as well as the locations of the three developments we have availability in Neighbourhood Heights, Smithfield House, and Southside Residence. I'll just touch on one development in each city here. And in terms of Manchester, Berkeley Square, I've got a very short video of development here. So that's an introductory video into Berkeley Square, which is in Manchester. It's a development of 250 units in the East Wing, which we currently have access to. 1 and 2 bed apartments. It completes in Q4 of 2026 with estimated rental yield of about 7%. It's 250-year leasehold, and here are the starting prices: 1 bed 235. 2 beds from 346. And here, this gives you an idea of the location. Obviously, we've got Media City to the left and the city centre to the right. So it's equidistant between the two, which is a very prime location. Over the next 5, 10, 15 years, Manchester City Council plans on bridging that gap between the city centre and Media City, which are the city's two biggest hubs. And Berkeley Square being right in the middle of it and opposite Pomona Island. It's a very prime location, which will experience significant capital appreciation over the coming years. Here are some CGIs of the amenities. It's got a communal rooftop garden, private residence courtyard, hotel-style concierge, gymnasium, co-working spaces, residence lounge as well. And some CGIs of what the developer plans on completing the apartments too. And we've got 2 payment plans on Berkeley Square for 1-bedroom apartments. It's a £5,000 reservation fee, 20% deposit, 80% on completion in Q4 2026, of which you can get a 70% loan to value mortgage. And for the 2 beds, it's a £5,000 reservation fee as well. 10% deposit, however, another 10% stage payment after 6 months, and then the balance on completion in Q4 2026. Once again, 70% loan to value mortgage available there as well. I'll just quickly touch on Sheffield. We've got the Belgrave. As mentioned earlier, this is right in the city centre of Sheffield. 108 unit studios, 1 and 2 bedroom apartments. The studios are now sold out in this, and I think we've got a handful of 1 beds left as well. Completing Q1 2026, estimated rental yield of about 7.5%. It's got a lease length of 999 years. The studios did start from £129,000, and the one bed's from 132, while the two beds started from £213,000. We've touched on the location in terms of Belgrave, where it is 0.2 miles to Sheffield Harlem, 0.4 miles to University of Sheffield, 0.6 miles to Sheffield's train station. So it's a walking distance to all of these locations, and it's in the city centre. And here are some CGIs of the building. It was formerly an office building, which the developer is refurbishing and renovating into luxury apartments. And here are some images of what the developer expects to complete the interior of the building. This is the standard they're aiming for, and some CGIs for you to have a look at there. And the payment plan in Belgrave and Sheffield is a £5,000 reservation fee, 20% deposit, and the balance on completion in Q1 2026. And Smithfield House in Birmingham. I've got another quick video I will share with you here. So that's Smithfield House in Birmingham, just a luxury development with 211 units. It's a mix of 1 and 2 beds, complete in the summer of 2027, with yields up to 7.95%. It's a 999-year leasehold, and 1 bed started from £219,000, with 2 beds from £309,000. And here's the location of Smithfield House. As you can see, we've got the HS2 in the bottom left, walking distance to that, as well as the Bullring and Grand Central, which are Birmingham's major shopping centre. So it's a very good location, walking distance to Birmingham's shopping centres, the HS2, and this completes in the summer of 2027 and is part of the Smithfield regeneration. Here are some CGIs of the amenities. It's got some luxury amenities. That's the reception and lounge, sky terrace, cinema room and games room, a gym, private dining, restaurant and bar, co-working spaces and quiet rooms. And the payment plan on this is quite interesting because it's a 5% reservation fee and 1% monthly deposit over 30 months. And then the balance on completion in the summer of 2027. So this is a very unique payment plan, especially in the UK. You don't tend to have, developers don't tend to provide payment plans such as these, where you pay 1% a month over the course of the build period. So this is quite unique, and for a lot of investors, this has been very handy for them, as opposed to 5% or 10, 15, 20% deposit. So a bit of a change here. However, it is obviously flexible because, similar to certain clients who may not want to pay 1% on a monthly basis, That can also be broken down into 6% every month for 6 months, 6% every 6 months. So 5% reservation fee, then 6% every 6 months until completion, where the balance can be completed with cash or a mortgage. In terms of the process for international investors, it's a very simple process. A lot of people have reservations regarding getting into the UK property market, may be confusing, they may not be sure on how it works. The process is very simple. In terms of the actual reservation, as mentioned, for example, in Berkeley Square and Belgrave, it's a £5,000 reservation fee, and in Smithfield House, it's 5% reservation fee. From that stage, we move on to the legals. This is where obviously the solicitors work for you, the investor. So we will introduce you to a UK qualified property solicitor who will obviously go through the AML and KYC checks with you, as well as provide the contracts. And their fee is typically £1,500. Thereafter, you'd exchange contracts, which is typically within 28 days of the reservation. So you pay your deposit minus the reservation fee. And thereafter, 6 months before completion, we would have the mortgage consultation, introduce you to our partners who can assist you with getting that mortgage to complete the balance, and then also introduce you to our property management partners. About 3 months before completion, we will start looking at getting the apartment up on the portals to find you a tenant, as well as their day-to-day management if you'd like it furnished. And that's when we would have that property management introduction. And then obviously you pay the balance on completion, whatever it is at that time, if it's 65% or 70%, and also the stamp duty as well there. So that's the process, very simple. And obviously we guide you through each phase and obviously introduce you to the relevant partners who can assist in the various stages, such as the mortgage consultation and the property management as well. At the moment, we've currently got a referral incentive going on. So, I mean, if you were to refer a friend for a UK property investment, we've got a £1,000 incentive going on upon the exchange of contracts. So some of those developments, you can exchange contracts with a minimum 10% deposit. And we've got this incentive going on. So in terms of any friends, colleagues, or family who may have questions regarding UK property, feel free to refer them over. And, if we are able to find a development that matches what they would be in the market for, we've got this incentive currently going on. So that's pretty much it. Thank you very much for your time and for your attention. I hope that all made sense in terms of the UK market, the hotspots that are there, where the market is going from a house price growth perspective, as well as from a rental growth perspective. And in terms of speaking to majority of you, we will be doing that over the course of this week. We'll love to reach out to you, find out if you had any questions at all regarding what we've gone through today. And if you would like to have an investment consultation, if you haven't already, if you've got any questions regarding a specific development, whether it's Berkeley Square, Belgrave, or Smithfield House, or the other 15 developments that we have access to, we'll be getting in touch with you over the course of this week to find out how best we can help you buy your second property, your third property, or if it's just your first, we'll be more than happy to assist further with that. So thank you once again for attending and for paying attention. It's very much appreciated, and I look forward to speaking to all of you in the days to come. Thank you very much.